Ladies and gentlemen, welcome back to the TMP Finance, where we make long and short-term investing simple. I do want to talk about the NASDAQ as we typically do, but also talk about some hot commodities that are surrounding the market that have very interesting price action you don't want to miss out on. And I'll also talk about the FOMC meeting that we had today. Let's take a look at fear and greed, which is currently sitting at 22. I still expect to see a little bit more of a correction in the market. I'm not biased whatsoever, but I just think that that is the most probable outcome considering the current state of the economy right now and also the price action surrounding the NASDAQ. We'll get into that a little bit later. Let's take a look at the heat map, which is green. It's recovering from yesterday's very bearish day. We are still seeing a lot of volatility in the market. Even the volatility is dropping down. Still seeing very volatile days, and especially it's very nerve-wracking to see volatility around the very key support that we've been talking about in all the previous videos. But let me talk about the FOMC before we start off. I'm going to say the panel was pretty dovish. There's a lot of times where, the commentators were asking questions that were kind of, trying to trick him out a little bit or get him to say something very reactive, but he still kept pretty strong. He did say that we do expect to see rate cuts around June of 2025, and you can expect at least a 25 base point cut. They are looking to get cuts of up to 50 basis points by the end of 2025 over here. So keep your eye out for that, but right now we are not cutting rates, even though jobs are pretty stable over here and unemployment has stayed pretty much the same. We are looking to take a little bit more time to get those cuts there, but it's still looking promising in the future. Let's talk about the bullish and the bearish scenario of the NASDAQ. I'll start off with my least favorite, which is the bullish scenario. Right now, what the bulls are looking for is going to be a very swift recovery from this huge fall that we've had. Typically, when you do expect to see well, you know what, it's not that bullish what I'm about to say, but when you are expecting to see a huge recovery, right, a huge rejection off one point, and we get that V-shaped recovery, you are looking for very high volume around the bottom here, which I'm just not seeing. But if you are a bull, you are looking for a drop off in the VIX, and we are currently under the 23 resistance over here, and we're actually under 20, which is also another, psychological key number that you are looking out for. And if you are a bull, you are looking for not just a break of the support line, but hold of this support line over here, and also a break of this support line at 20,000, which is a huge psychological number and a very key resistance too. As we can see, it was a previous all-time high at one point, and we had a lot of tops over here and rejections off this line as well. And from there, you are looking to reach up to 20,750 up here, which was where the market was kept in a range for quite a while, and we had a lot of very good bounces off of this. So that is the bullish scenario. Now the bearish scenario, I can go off for quite a while here. Let's talk about just the price action alone. I'm not seeing very strong moves to the upside over here. We have one green day, and then it's red the very next day. I see so many wicks and rejections off the support line, which is understandable because it's a very strong support. But I'm just not seeing that breakthrough. And if we did have a huge move where we fell down 13% within just a few weeks here, which is even steeper than the drop off we had in 2024, you are looking for a recovery that is just as strong as the bearish move down. And I'm just not seeing that. If we take a look at today's intraday price action as well, we can see that the FOMC did have a bit of a boost in the market, and we were up quite a bit actually. I believe it was like 0.8% within 30 minutes, but we got that rejection all the way back down and a pretty nasty wick. This doesn't look bullish to me at all. I would expect a break there, but right now I'm not seeing that. The volume, if you look at the QQQ volume, if you are a bear, you are looking for a drop off in the seller's volume, which is good over here, and then you are looking for green candles over here, right? But the volume for the bulls is weaker than the bears, and I'm just not seeing that volume come up, and that, again, that's swift recovery there. So I am waiting for a very generous break of the 20,000 line there to go bullish, but I don't expect to see that. I do expect to see a bit more of a drop down, and I think that this is a lower high in this current bear scenario, and I do believe that we are looking to move down to from here all the way down to about 18,300, which is held up to be a very strong support line, as we've had previous all-time highs over here and a lot of very strong bounces off the support line that have created all-time highs. So if you are a bull, there's still ways to make money, right? You're just waiting for that drop over there, which would be very swift. I'm thinking maybe 3 days, maybe 4 days at the max, but it's going to fall very, very quickly as we're keeping a very tight kind of range currently, right? Typically when you have this, I'm not a huge pattern trader, but typically when you have a formation that looks like this, right, you have parallel lines moving up, you are looking for that breakdown. So that is what I'm looking for there as well. From there, who knows, maybe we can get a very good rejection that brings us to all-time highs. But right now, I do want to keep an eye out for this, either look for a breakthrough or a very strong rejection of that level. Let's talk about Shiba actually. Shiba had a bull. It looks like it's about to break out today. Let's take a look at this resistance level, and we're currently up it, not by a crazy amount, but we have broken this resistance line that has been pretty strong since late 2024 over here. And that is a pretty good move. I could expect the market to move up to a previous high in this kind of downtrend that we've had. So you are looking for about a 53% move up, which I think is very possible. We are sitting at a support over here, which is 14 or 15% lower than we are currently. So it's still good risk to reward. I do want to see a bit more confirmation that we are looking to change directions, just because this move here of, let's see what we're currently at, 1.91 is not very significant, and it's definitely not significant for a breakout. So I do want to see a retest of that, and then some bullish momentum moving back up from that retest there. So keep an eye out for Shiba over there. Should mention as well, it's fallen 53% from this previous high that we've had here. So there is a very good move from the top over there, right? That you can cash. Oh, sorry, 61%. Yeah, 61% from the top there. So keep an eye out for that. Let's take a look at AMD over here. And just like Shiba, I found that we've had very strong price action with Shiba and AMD. They're kind of very similar in the sense that they have a huge crash where you're looking to move down another 50-60% from this previous high over here. And we've been stuck in this very strong bearish trend ever since early 2024. And right now, we did actually get a break of this pretty monstrous downtrend line over here. It's been stepping back from late 2024, and again the breakout isn't very strong, so I am looking for that retest and the bounce again, but the risk to reward isn't all that bad. If you take a look at about the 100 support level over there, you are looking at about a 5 risk to reward if you are looking to meet back up to this previous resistance. And this is a pretty strong resistance that's been stemming for longer than this resistance line over here, ever since early 2024. So you are looking for a touch of there, or you could just, just let it run. Whether you are, if you're a long-term investor, just let it run. If you are a day trader, you are looking to take profit somewhere a little bit more soon. So you could look for places to have pretty big rejections, which I'm looking at this 121 line over here. So that still is looking like it's still a decent risk to reward. You're looking at 3 risk to reward over there, but it's just about what you're comfortable as a trader, and that's really up to you. The thing about trading is you have to do what makes sense to you. There are different investors where they will get the same alerts, right? But if they're not managing the risk properly, some can go bust while others are going to make crazy money. So do pay attention to what your account's telling you, and pay attention to how much money you're willing to lose if things do go bad. So keep an eye out for that. But that is a wrap for today's analysis. If you guys have any questions about my analysis or about anything at all, do leave a comment in the comment section down below, and I will get back to you pretty quickly. But if you are looking for more support and you are looking to ask me questions, get trade alerts, get hot stock picks, you can take a look at the description down below and find the wap.com/TNP Finance link, where you can get access to the Discord and get all those features that I just talked about there. So we are beating the market by 10.3%, while the S&P is down 3.29%. So if you're not beating the market, you gotta go back to the drawing board and try and figure out where you're going wrong, because there's been a lot of opportunities to make money. And if that's not for you, if you don't see yourself doing all that analysis and you'd rather have someone do it for you, well, there you are. That TNP Finance Discord is always there for you, and it's made very, very simple. We tell you when to get in, when to get out, what you're looking out for. And yeah, well, anyways, thank you very much for tuning in. I will see you in the next video, and best of luck when it comes to your trading in the next day. Peace out, y'all. Take care.